Let's get started this morning. Welcome, everybody. It's Don Kaufman. And, well, what do we got here this morning? In a few moments, I'm going to bring on Brandon Chapman. He's going to be with me for the entire first hour. So I'm going to torture Brandon a little bit. I should probably not be around people today. That's all right. Taking shots at Garrett for the last half an hour. It made my morning much better, though. I have to tell you, it's Garrett's easy pickings, though. S&Ps this morning massively unchanged, and there's just no volume at all overnight. 140,000 contracts says nothing is going on. There really is not a whole hell of a lot going on, except gold. We're going to talk extensively about gold and silver this morning. There's no question, this thing is it's ugly out there. I was actually looking up the rules of this too. I think you guys are going to be really, really surprised about that. So bear with me on the thought. There are some things, trust me, I did not know about the metals market that I think you'll be relatively surprised. So we're getting ready for the cash open. We do have some movement in the bond markets. The bonds continue to kind of track a little bit higher. I am surprised by that. I'm surprised by that because government shut down. It's like, no, interest rates are going lower. No, it's going to be okay. It's a market of denial on a lot of different fronts. So we'll bring Brandon into that conversation as well. Taking a look at the financials this morning, down very, very mildly. The energy sector here this morning, and I like to look at some of the big sectors right off the bat. The energy sector, there's nothing really going on. It's a very mild bid. When it comes to the usual suspects, okay, we're massively unchanged with a side order of massively unchanged. There is no movement in any, okay, of the major tech stocks here this morning to any extent, anything worth pointing out. They're all basically flat across the board, even Apple's spectacular day yesterday. So you're coming into a marketplace where, I'm going to tell you, okay, I would not sit here and think like, that volatility is just going to fade away. And it's fading off into the sunset because the irony is volatility is actually up a little bit this morning. We're going to open into a slop fest. Allow the marketplace to open, allow the order flow to kind of dictate because it's kind of left to its own device. So, that's one of the reasons I wanted to bring on Brandon this morning is to talk a little bit about order flow and what's going on kind of underneath the belly of the beast in the options marketplace. We're opening into a complete and total swap fest. It's a 50-50 advanced decline line. What do you got? You got absolutely nothing in terms of ticks. It's a negative 175, which means squat. And bringing up the financials right out of the gate, they're unchanged. The energy sector is relatively unchanged. 0.3% didn't even matter. Okay. And there is no movement other than maybe Amazon, which, I do find it quite ironic that Amazon almost blows up, the internet yesterday for some 15 hours. And don't worry, it's okay. The stock is actually up. Boy, did they get trolled hard, though, from Elon Musk. I mean, he was absolutely relentless. It was like at least one or two posts every single hour, diabolical, okay, regarding the Amazon AWS outage yesterday. It was great. So it's amusing stuff over there. All right. With that being said, as we kind of open up, the thing to watch has been gold in the overnight session, which is just getting absolutely killed. You are seeing some price action early out of Google. I'm not exactly sure where this is coming from, but this is exactly what I've been pointing out lately. Markets often waiting, okay, to open, okay, and being shifted around exclusively based on order flow, of which right now you can see absolutely nothing now. Look at this. There's a big put buyer in Google early on. That's what moved it down. I mean, somebody came out of the gate, bought a bunch of puts, okay, moved the thing down. What's weird about Google, though, whenever you look at Google, you got to look at Goog and Google L. There's often arbitrage between the two, which tiny little cracks and inefficiencies open up between the two. But if somebody buys a bunch of puts on Google L, they often do it on Goog as well. So here you're seeing some early order flow coming out of Goog, which happen to have a position on too. Yeah. What happened to my 6711? I don't see any 6711 up here. Do you? Okay. Not exactly feeling it. So let's first go to expected move, and then we'll get Brandon involved in the conversation. But to begin with here, today, today there's only a $33 expected move. Okay. Yesterday, the expected move was 57 bucks. We smashed through it. We smashed through it. Okay. There was this no respect to the expected move. And be mindful though, with a $33 expected move, which is back to fairly light, right? It's a 0.5% move. You're still sitting on a $135 expected move for the week. Now, last week, and you know what? I over zoomed. Okay. I over zoomed. Last week, we did not hit the upper nor lower edge of an expected move. We did not hit the upper nor the lower edge of an expected move. Granted, last week there was a $197 expected move. Okay. This week, I'm all but assured that we will do so. Okay. If you are into the idea of placing an SPX butterfly this week, for what it's worth, the only one you could place is bearish, and I'm going to do just that. Why? Okay. Why can I only place the bearish? Because we're like halfway home to the upper edge of the expected move, and the bearish one's going to cost next to nothing, right? So if I want to take a shot this week, let's get, okay, it's going to be we're going to call the middle of my fly, the middle of my fly. We're going to call it 6530. So 6530 inside of the SPX. Now, it's important to know, okay, I am going to take the shot, of course, at the Friday expiration. What's Friday? Friday is the 24th. I'm checking my calendar over here. Friday is the 24th. Where would the center of my fly be? Okay, stay at 6530. So 6530 fly. We go by deep and wide, 1 month. Let's go 4 strike. Let's get all kinds of crazy. Okay. Holy moly. That's a bigger fly. That's a bigger fly. Okay. So there's this huge butterfly out there. And you know, I can send this out. I just don't want to take a lot of crap from people like, that's 200 points out of the money, man. Okay. I've seen crazier things happen. So you know what? I'm gonna trade it and probably not send it. Do you hear me, Todd? I'm gonna trade it, but I'm not gonna send it because I just do not want to answer the damn emails. I'm, I'm gonna see. Is that terrible? Like he's like, so you're saying that you won't send out a trade because you don't want to answer emails about people asking you, okay? Because a lot of people don't tune in, okay, to this first hour. All they do is just blindly do whatever trade that I'm doing. Okay. Look at that. Filled that sucker for 20 cents. Okay. So, all right, there you go. Here you go. So that's a Friday expected move butterfly. Okay. Yeah, so we'll not be sending that one out because okay, I fear I would receive 800 emails of people that did not necessarily tune into this first hour. I'm telling you, okay, this is a little bit of a wing and a prayer. I like it. Okay. I'm not here for trend day tactics and crap like that. Okay. I'm here for wild and woolly moves. And I almost assure you, okay, that this week we will hit up here or we will hit down here. And right now, there's a higher probability of hitting the upper edge of the expected move. And of course, people are going to question why. Whoops, swing and a miss. Why don't you do the upper edge of the expected move? Because I'm going to show you. Okay. In fact, I'm going to bring Brandon into this conversation here momentarily. The upper edge of the expected move is right at 6,800. I'm telling you, more than anybody, I love big round numbers. I love to trade right on there. But if I go to the 6,800 strike and I go buy deep and wide, I'm just going to do a $15 wide butterfly, just a $15 wide butterfly. That price isn't doable. It's absolutely sheer stupidity to pay $1.20 for a butterfly because I know as well as some of you do that if you get to 6,800, the butterfly, it might only widen initially to $1.45 or $2 at most. Like, and that's, on Friday, forget it. Forget it. How do I know that? Okay. Because I trade flies. I trade lots of flies. and I know both the opening and value, like opening value, and the closing value. When you're seeing me closing flies that we were like spot on, $1.90, 245, I could go back and look at more order flow, but there's no way in hell that you can pay that much for a fly. You go out, you pay 20 cents for a butterfly that can be worth as much as $20. Then we're talking. So the butterfly is to the downside. I am more than aware that my butterfly, is literally 200 points out of the money. With that, ladies and gentlemen, Mr. Brandon Chapman. That's your cue, man.
I know. Camera's coming on. It's warming up. Just like the car this morning.
He needs entry music. Car. You get in a car in the morning? Do you commute your living room? I
drive my son to seminary, so.
Oh man. Yeah, you know what? I'm glad I don't have to do that. Like my wife does all the commuting in the morning. So she brings 2 kids to school. She comes home. She brings another kid to school. She comes home. Then she like goes, whatever. I mean, it's just ridiculous how many times she start, stop. Like, I want to lose my mind. Yeah, absolutely lose my mind. And she's like sits in the car waiting for them for half an hour because you have to get in line with all the other angry parents. They're very angry parents.
Well, it was like 33 degrees this morning, and I got a chance to wear my quilted shacket. So, Don, you need that with your UGG boot or UGG slipper accessory, the quilted shacket when you drive to Flagstaff.
I don't know what a quilted, I don't know what that is.
It's just a shirt, but it's a jacket, but it's quilted.
If you say so. Actually, for Flagstaff, I have a battery operated jacket. Thank you. I've never had one of those before. My wife's like, you should get one because it's cool. Just hit a little
those
button
are good
right
for
there.
Sporting events, right? I'm like, these parents have, I'm like, dang, I need one of those. Yeah, they got a little light right here and got the vest or the jacket. And I'm like, dang, because sometimes it gets cold, right? You get wet, it's cold.
Or you might want to take your golf cart out when it's like icy and snowy and see if you can actually spin the golf cart. Yeah. So these are the things
I don't have a golf cart, but I do take my off-road vehicles into the snow. And I remember one time I had the snow was coming over the hood. I'm like, oh no, am I going to get stuck out in this field?
Yeah, that's pretty good.
But I'll tell you, there was a big butterfly on Monday or yesterday. No, sorry. Yeah, it was on Monday for December 19th. It was 100,000 contract butterfly at 505 was the center strike. I mean, it was huge, right? But I mean, these are just bets you're taking. Are we going to get to 505 on the SPY by December 19th? Probably not. But man, if that sucker works, I mean, it's a big payout.
Wait, which strike is it? 5505?
I'll find it. It was a 505 is a 50 points. So 555, 505.
Oh, very plausible. I think that's absolutely plausible. I mean, I wouldn't, because if you look by December, and it depends what, December expiration. I'm going to guess it's probably either the monthlies are right here. I mean, there's a $400 expected move. So that's an abnormal occurrence. So you look like 2 standard deviations and you home there, you're not too far off. But the other thing is when I see like really humongous out of the money butterflies, sometimes they'll buy them in one and sell them in another expiration and kind of like arb and lock them in like a box or a jelly roll. Yeah.
I mean, so they might be doing a different product, but again, it's just interesting. I'm like, they're using basically April's low, saying, hey, there's a chance we might test April's low, right? I mean, 100,000 contracts, you'll see it. It's at the 455, 505, 555. It's a 100, 200, 100, 1 by 2 by 1. So it's interesting. But I did take the butterfly trade in SPX you just did.
Oh, how very nice. You know what? I'm going to work one more at 15 cents just to see if I can fill it just for that.
I should be more patient. I got filled at 20.
Yeah.
Hey, if it goes to $2.
Oh man, that's huge. It's absolutely huge. And I'm not, the one thing, the reason I did the butterfly, okay, you know what? Should we send it out? What do you think? We should send it out? Todd, I'm going to let Todd decide. Okay?
Just
Todd,
let him know, hey, we're swinging for the fences here, right? But
by the way, Todd listens. Todd actually listens, so he's listening to the conversation over here.
Todd's
we can't actually bring him on though. we should bring him on once in a while and torture him a little bit, like poke the bear in the cave over there. It's a good thing I'm not sitting in the same room because he would probably reach across the desk and choke me at least 50% of the time. So He traded on the floor for a long time, which implies that he is psycho. So he's very calm and home.
Right.
Okay, very
There's
calm.
that very calm exterior, but inside is a burning furnace of rage. We had an email about butterflies saying why doesn't Don do more call butterflies? I'm like, because his assumption was that if I buy call butterflies, I have a high probability of success. And you just don't, right? I mean, so the idea is the call volatility is lower, making butterflies more expensive. The put volatility is higher, making put butterflies cheaper. And with skew ramping up, man, we're starting to normalize on skew. As VIX dropped yesterday, skew went higher. It's just going to make those call butterflies more expensive relative to the put side. So just realize this is a low probability trade. You're swinging for the fences every time.
Yeah, it's funny because there's always the assumption. I do, okay. Let me see. Your call. Yeah, we could send it out. Let's do it. Let's do this.
So Kaltor's on the SPY. It was the 505, 455, 555 for December 19.
Oh, we'll look at that in a minute. I was going to bring up skew. So I got skew on the screen right now. The one thing is, okay, and I want to explain this. I want to explain to everybody something. I do more bearish trades because in-out spreads price more effectively to the downside because of skew. I do, okay, put butterflies because skew prices more effectively for the put butterfly. And everything that you do in this business, okay, it's like playing, like if you look at this, like you play a game of cards, okay, and you're playing against the house, okay, you have to do everything right, and the house still has an edge over you, right? Here, okay, in finance, the house does not have an edge like over you unless you give it to them, meaning that you trade with the wind in your face, like against skew.
Yeah.
You mathematically are not in a good position. Like if I do call butterflies in the SPX, it doesn't, like, people think, oh, more call butterflies hit. No, I'm sorry, they don't. Okay. I got data going back here until 2017 to display exactly that. Like I can even tell you the number of butterflies. By the way, this is like a weekly chart, so it's always weird. The number of butterflies that hit the upper edge versus like the lower edge of the expected move.
Yeah.
But people immediately, but the market always goes up. That's over, okay, time, but not on a weekly basis. There's just as many instances though. We hit the lower edge. We closed in the lower edge. We closed in the lower edge. We hit the lower edge. We hit the upper edge. I can go back. There's so much data here. Okay. I actually built a little script to read like this and say like how many hit the upper versus the lower. And it's almost perfect. It literally is almost perfect in there. All right. It's getting hot in here. Okay. It's getting hot. It's already, it's going to be like 87 degrees down here in the valley today. I think I'm going to
We're going to be low 60s. We started off low cold. It's 33.
Yeah,
but that's the thing is like, the S&P, and this is the skew is not wrong, right? I mean, the reality is the crash risk, the bigger moves are to the downside. And we were talking about going to the outer expected move, especially when you have high skew, the default position. Yes, market grinds higher, but that means the moves you're getting are really, really small to the upside, but the downside moves are big. And so this is where the high skew says, hey, take advantage of it. Look for the cheap put butterflies, because when it breaks, because the skew tells you we're going to grind to the upside until we don't.
Who you calling cheap put butterflies?
Mike Turvey and I we used to do the morning show for TD Ameritrade, like on the education side, and we call them cheap shots. I'm like, because that's what they are. It's a shot. Have a take, don't suck. Right? It's the Jim Rome trade.
Hold on, I'm just making sure I got the strikes right. But when we send this out, 65.50, 65.50, 65.30, 65.10. Yeah. We're making sure.
50, 30, 10.
All right. Sorry, I found a mistake. No. I'm live, man, and I'm finding mistakes. What the hell? Okay. You know what happens when you get old? You apparently make
Yeah.
a lot of mistakes.
When I used to take phone calls, like, and I was like, I kept trying to promise myself, I'm not going to trade while I'm talking because inevitably you make a mistake, right? You do a limit instead of a stop, and it just took me out. And I'm like, my stop.
Nah,
No, but
nah. I just don't listen.
I did. Like you back when you're on the phone, like you have some interesting conversations. Sometimes this guy calls up and he hit his pattern day trader, thing, and he's like, okay, did I do this right? And he bought puts instead of calls, and he blamed it on dyslexia. And maybe that's a real thing. I'm like puts and calls, but I'm
Put
like
versus call. Yeah, no,
but I did it. He's
you're
like,
full
I
of
did it
crap.
again because he hit the pattern day trader thing. He did his trades, and now he's gonna be locked up, and he can't get out of it. I'm like, sometimes maybe we're not made for trading.
By the way, this is actually hysterical. Todd had screwed something up, and he's like, "All right, hold on. The jacket's got to come off over here. I'm dying. I'm dying in here. I'm dying in here." It was really cold when I walked outside this morning, and I was like, "Yeah, it's jacket weather. It's jacket." Yeah. What? Hey! Now let's not do. Oh,
I'm gonna
blue
undo a
on a blue
snap. I'm gonna
background.
undo a snap. Oh, there we go. I'm cooler already.
It's I don't want to know what snap you undid, but yeah. Okay. I am wearing pants during this broadcast.
Hey, I didn't want I saw that my discovery, I didn't want to replace the C bottoms yet. I'm like, so I got these shearling like C bottoms, and my wife makes fun of me. But man, those suckers are warm. Got on, the leather seats were not cold at all. I didn't even need the seat warmer.
No, I'm with your wife.
I'm sitting on wool, baby.
I'll gladly make fun of you. It's much better that way. All right, so the butterfly, good to go.
You should get some shearling, seat covers for the Tesla. For the
oh man, that's just wrong. It's just wrong. So I want to go over a couple things really quick before we get really into it. Volatility is screaming again. It may have overshot to the downside yesterday. So I got a question, this morning. There was an email sent to me, and it was like, why didn't you trade, volatility near its highs? Because clearly I didn't think it was at its highs, and I'm still not sure it was at its highs. Like literally somebody's like, well, why didn't you trade, and sell the Nove and buy, and buy the Dece when they were inverted? And I'm like, because I clearly think that we're not done yet. So I'm letting you guys know that, you look at a day, and yesterday there was only one thing that surprised me about yesterday's trade. Only one thing. Okay. We went up and we stayed up. I expected far more. There was a little bit of two-sided chop, but I expected far more two-sided trade. And I didn't get it yesterday. And I was surprised. And I'm thinking to myself, I'm like, volatility just die out. It's not dead. Okay. Yeah. It is by far, and it's far stretched from dead. You're seeing everybody right now, though, focus on gold. We're going to get there in just a second. But I want to bring up the S&Ps for a moment, because what doesn't kind of jive on the screen is you got the S&Ps down 6, you got the NASDAQ down 0.2%. I mean, these are basically flat, but volatility is starting to rage already. That's rage. I mean, 55 cents is some big boy movement. I know that's in the short duration, but I'm not even looking in the short duration. I'm actually looking on my screen right here at the 29-day out. It's up 50 cents. What the hell? There's days, okay, Brandon, there's days recently we've seen the S&Ps down 30 or 40 handles, and they didn't move 47 cents. So what's going on?
I mean, the vol scenario the last little bit's been crazy. I mean, skew's been suppressed, and the vol's been higher, hanging around that 15. Then we popped. I mean, we're backing up. But the thing is, sometimes, VIX goes in backwardation, but it's just barely, right? You get those front 2 months, they flip a little bit, but then the curve's up from there. And it just gives it to you too easily, when really, when we look at where skew is, where we look at the front, the back month volatility against the front month volatility, we're really looking at pricing in more of a 5 to 10% correction in the S&P, and we didn't get it. And so sometimes, again, we can overestimate, we had one down day. Yeah, but is that done? And you could take advantage of the backwardation, but the reality is that backwardation can get a lot steeper, and it can go for months out. And I think that's really what we need right now, not just a one down day, 3%. We need something bigger to really normalize what's happening in volatility, because this is not normal.
Well, yeah, no, I've seen you've seen all kind of things over, 20, 30 years of trading. But I think one of the most wild things that I've seen, again, much more like recently, is you
Mhm.
have a market at an all-time high and volatility that just started to rip out of
Yeah,
nowhere. Like
right.
that, and to the not so experienced, okay, maybe you didn't notice that until we brought it up, which is okay. And to somebody that has no idea, that's just involved in markets, they're like, oh, there was one really big down day and I was really scared. It was crazy is that fear indicator, like Bank of America's fear indicator, was like extreme fear. And I'm like, extreme fear. And that
Right.
was like, it was like over here, like on this Monday or whatever, extreme fear. What the hell are you talking about? We're like 2% from the high. Now you're like, within striking distance of the high, like today, like an all-time high
Yeah.
could happen today. And there's no extreme fear, except, okay, for those that actually kind of know what's going on, you're like, that is a big freaking spike.
Yeah.
And the one thing about volatility is that when volatility takes off to the upside, okay, it is not a standalone trade. Okay, meaning that like the VIX doesn't just go up. The VIX is a function of the SPX. So the SPX, the mother of all product, says things are much more expensive, okay, for a reason. And then the volatility futures say stuff, and there's huge amounts of trades that go off because the VX hit 28, because the VIX, okay, almost hit 30. I mean, crazy
Mhm.
amount of order flow. That order flow, okay, has to eventually be unwound. People bought options at egregiously high prices versus
Yeah.
where we're presently trading. So as they start to unwind, the unwind itself is going to create more volatility. The one thing that people don't understand about volatility, more volatility begets more volatility. And it doesn't often go quietly into the night. And the suppression, okay, of vol in yesterday's trade was fairly wild to me, where it just basically we went up and just
Yeah.
flatlined. It was almost like the markets are tired. By
Oh,
the way, the volume in the S&Ps yesterday was non-existent.
yeah.
It was like, half of what it was in the previous trading session. The options volume yesterday was only 59 million contracts. We've been clear up easily 86, 87 million every day in the options market over the previous week. We were in the top 10, okay, of all time for the amount of options that traded. And then like yesterday is like below average. Really weird day. Really weird day. And everybody's like, it's all over. Okay. It's all over until, of course, you're going to look at gold in a second. But Brandon, go ahead.
Yeah. Well, one of the things that happened, we saw the VIX pop up here, right? And we had pretty high dispersion, meaning that if you look at VIX EQ, this is basically the components of the S&P 500's volatility. It's at 42. The VIX popped. The reality is that dispersion did not really change. So despite the fact that we saw that the VIX spiked, we saw that the component volatility also spiked. And so right now we're still seeing very, very high dispersion in the volatility markets, despite the fact that VIX is trading at higher levels. And so again, we're still seeing kind of that side of we're still buying volatility in the components, and
Yeah.
we're not seeing that normalize yet. Again, these are we
Part of
talked
this
about
has to do with earnings. Like I'll give you that.
it
Part of it
might,
has to do
yeah,
with earnings, but in fact, so you can see a normal like ebb and flow of like earnings in here. Now this is obviously
mhm,
April. April had earnings, but you
yeah,
can see volatility has kind of come up and down a little bit just in this area. But this is a far cry from like normal. I was saying 2 weeks ago that the dispersion trade was completely coming apart. And then all of a sudden, like the volatility came up, and I was like, oh no, no, now that makes sense. But
yeah,
if there's one area of summation of like looking at the VIX EQ, and by the way, I haven't looked at this in like a long time.
yeah.
Um,
I neither.
so no, it's kind of cool you brought it up. I like it. I should actually add that to the very verb. I don't often add symbols. Okay, I don't often add symbols, but when I
Oh
do,
man,
it's something spectacular.
we moved on.
Um, was that Bill Murray? I don't often wear underwear, but when I do, it's something spectacular. Anyway,
The only thing between me and you is a thin piece of gabardine.
I was talking about stripes, and here you are back to Seinfeld. All right. Don't you see what's going on here? Yes, I know every single line of every Seinfeld episode.
I know I had to brush up on my. I mean, I had like a few things that were right, but I went through and I bought and watched the Seinfeld series just so I could catch up a little bit with you guys.
Stripes is awesome. Stripes is a great
It's
movie.
been
I
a
mean, it's
long
like
time since I've seen
old
Stripes.
school dirty. I like it. Like Animal House. That's absolute classic. My kids even watched Animal House. The older kids, the younger one,
Uh,
he can't sit still for like more than 2 seconds. you know, he's a little bit of a lost cause. You know what? You know what is actually the best movie to show the kids? Okay, in all seriousness, The Outsiders. Like they were like, oh, this is boring. They're like, at the end of it, they're like crying.
yeah, well, like
Do it for Pony Boy.
my two older boys, I read the book. They didn't watch the movie though. I have the movie, but they never watched it. But they did read the book. They liked it.
Oh, really? Like they read? I'm sorry, man.
Yeah,
Mine.
I don't get it.
I'm just. All right. So
My
let's
daughter's
let's.
reading Holes at school, and I'm like, why do you want to ruin
Uh,
the movie?
the movie was the worst. That was the worst, man. I'm sorry, I did
I
not like
liked
it.
Holes though.
Oh, the
Shia
book
LaBeouf.
actually. That one I did read the book, but
See,
all
you
right.
ruined the
So
movie. That perfect corollary, right? You didn't like Holes because you read the book.
I'm gonna make you piggy. Anyway, the Nasdaq right now feeling a little bit more sell side activity, kind of dragging down markets. The most alarming thing on the screen is volatility is at pretty extreme levels here versus the S&P is being down
Yeah.
10, but we've seen a lot of that recently. The financials are unchanged in here, and the advanced decline line. Pay no attention to the advanced decline line right now. What you have is some motion, okay, and some big boy products that are again, I can't tell you why volatility is where it is because
Mm-mm.
I don't see the price action here in Nvidia. It's down, not even 1%. Nvidia, like Tesla, it's down like 1%. Who cares about Tesla? It's got earnings coming out. Broadcom down 1.5%. There's no order flow in here to really dictate what's going on. There's some put buying going on in Broadcom, but look, far be it for me to like look at the tape and we're going down, we're doing this. The bottom line is somebody sees something. Let's cut to
Well,
it. Let's cruise over to gold.
just really quick
Yeah.
though. I mean, yeah, gold's kind of part of this too. But I'm like, you go back just prior to Lehman. Uh, this VIX was at 30, right? And yet you looked at the move in the market. It just seemed like it
Nominal.
was cheap, And then all of a sudden we get this explosion in September, October to like 90. But you go back to July of July of '08. I'm like, the VIX at 30, you're like, well, okay, that's high. It can't go any higher, right? Yeah, I can.
It definitely sees things before you see it. There's no question about that. Like, listen, I know that people like they always think that somebody knows something. Okay. Sometimes, okay, trade just starts buying volatility. And I've been in situations like this. Trade literally just starts buying volatility. Okay. And it feels like it's just simply out of nowhere. Somebody knows something. Look, nobody knows a damn thing
Yeah.
other than maybe Nancy Pelosi, but that's a whole different story. But nobody
Or,
knows
Bill Ackman would get
anything.
pulled in a
Okay?
room and say, hey, we're going to shut stuff down. And he has a short. But my point is like, but we're talking about gold. Isn't this a very similar corollary to VIX, right? Why are you buying gold so much? I mean, why is gold doubling the performance of the S&P 500? It's crazy.
I don't, I don't find the moving gold like as wild as people are stating because and I'm just going to throw this out here. The reason I don't think the move in gold, I mean it is wild in terms of let's pull up GLD for a second and I want you guys to see auto expected moves and the number of like instances of it cracking outside the expected move in this rally.
Mm-hmm.
That's a little bit wild, right? So cracks outside, that's nothing, cracks outside, hugely outside, hits it. Okay, this is 1, 2, 3, 4. It's 5 weeks in a row, which is statistically like that is insane. But the move that you're seeing today, okay, is just like anything else that comes back down. So it's a 4% move. You saw that in a lot of tech stocks too.
Right.
I mean, if I bring up Nvidia, okay, what do you think that move is right here? It's no different.
But it's gold. Gold has no return.
But gold though is into a gamma squeeze, and it's forget what we classically know, okay, and logically know about it. It got caught up specifically GLD. The amount of options trading in here, okay, this looks like a tech stock.
Right.
It's 370,000 contracts for $384 product. So let's find another product in similar price that's tech. Let's go to Tesla. Is Tesla doing 370,000 contracts today? Not even close.
Yeah.
So my point is one that, all these the idiots on TV are totally missing, is that, okay, the gold trade, like it's the new Apple. Like gold is the new Apple because Apple's doing 360,000 contracts, $234 product. Okay. So you pull up GLD. Okay. Order flow has gripped hold. This is exactly like I was talking about in VIX a moment ago. Like VIX, when volatility starts taking on a life of its own, okay, volatility doesn't lie. So option trades have taken on a life of their own. And the option trades, okay, are going to knock GLD or gold around, okay, like it's a toy. And then all of a sudden, you get all these like, crazy people that stand in line. They're like, I need some gold. I mean, that's how the tulip bulb thing went down too. But I want to talk about gold in the sense of, is it a big move? Okay, it's 4%. Have we seen 4% moves in here?
Well,
Not really,
last
though, in
week's
modern.
we made a 3 standard deviation, so 3 times the expected move last week
Right, right.
on the close on the 16th.
So here's the thing, okay? The gold move, I thought this morning was big league. And I'm like thinking to myself, I'm like, if gold moves 7%, do they lock it down? And the answer is no. So I looked at the CME rules this morning, and I'll be honest, I had to go to the rule book for this one because I really, it's been so long since I've seen, silver or gold moving to this extent.
Mm.
And, silver, by the way, is right there with it. Silver is even more, drama in here right now.
Yeah.
It's down some 7%. It is not near its circuit breaker. And I'm actually going to read to you guys specifically, okay? Metals use dynamic circuit breakers, okay? DCB, which I did know that they use dynamic circuit breakers, okay? The band, though, for the dynamic circuit breaker is recalculated, okay, on a rolling 60-minute look back, okay? If price moves, wait for it, plus or minus 10% in a 60-minute window, the CME will trigger a 2-minute trading halt. Oh, are you freaking kidding me? People are going to get slaughtered in here. Like, did it move 10% in the last 6? No, it did not. You're screwed. And even when they do put and apply a circuit breaker, it like locks it down for, but still my heart, it only locks it down for like 2 minutes. Okay.
Mm-hmm.
All I know, okay, is if I'm trading this and I'm on the brokerage side of the business, man, I'm going to make the margin so freaking high that nobody is going to be able to trade it. Okay. And I really mean that. Like if I was running still, division of TD, okay, this would be a conversation that we would have already had. Like there's just no if and or but about it. And you can see like gold, it's like $25,000 to carry a GC contract. And if you don't know anything about gold, okay, if it moves, okay, 10 cents, you make or lose $10. But again, the initial margin requirement in gold right now is $30,000, which implies something absolutely, okay, huge. It implies the capacity for this product to move, okay, is double where it currently is. Meaning, when they say that the initial margin requirement is $30,000, $30,000 basically implies like you could make or lose $30,000 in a day. And if you were in a position right now, okay, you'd be making or losing, $16,000 today in this product. Okay. So it would be almost double this move. So if you're thinking like, how wild could this get? Okay. Well, it could get double as wild. That's why the margin is set where it is. And I leave that expertise of where the product can probably go, leave that to the CME and to the brokerage firms. But pretty wild to say like, gold could be trading, 4,000 by the end of the day with ease.
Well, yeah. The thing is, yes, there are bigger dynamics happening in gold, right? You have an administration that wants to bring home manufacturing, right? Which means that there's not going to be as much dollar reserves floating out there. So what do you convert those dollars to? Gold, right? So central banks are buying gold. The amount of gold holdings are going up. The amount of treasury holdings going down relative to gold. All of those dynamics are playing out, and it is positive for gold in the near term as we're kind of revaluing its usage. But we have a paper market for gold. And you're seeing that in futures contracts. It's leveraged. So the question is, we're going to see how leveraged this trade is in gold if we break here. Because if we break hard and we see a significant correction in gold, you realize that there's just massive speculation going on in gold, which the options market would suggest. Its volatility is at 86th percentile. I mean, you get over 80%, there's a bit of instability when you're really pricing at the high end of volatility. But again, this is also why, using skew in your favor, trading spreads on gold on the way up is better than just owning GLD.
Yeah, I like, look, this is the implied vol. This is the vol ranking. And yesterday you hit the highest implied volatility in here that you had in quite some time. But
Yeah.
Actually, I'm going to pull up a study. I'm just going to pull up implied volatility itself. Okay. Because the implied volatility here, this is over the last 9 months. But even if you bring up implied volatility for 3 years, you did spike to the highest implied volatility gold yesterday in 3 years. And that's, I mean, clearly a sign of, something wild. It's implying. Now, if you took the exact same logic though, of volatility and you applied it to the S&Ps, that's where you get a little bit afraid. So, you make an interesting point that I hadn't really thought about too much until just when you mentioned it. And that is, so gold's getting smoked right now. Silver's getting hit. Okay. How much of this is going to spill over into equity markets? It's not so much of a correlation factor, but when people start taking a big hit in gold, it might actually influence some of their other position. I mean, there's other people that are looking at this like, oh, what a great opportunity to buy gold,
Right.
5% lower. And I'm like, yeah, you first there,
Yeah,
big
right.
guy. You're going to buy that when it's down 5%. Normally I'd say, oh, sure, no problem. And then you look at like SLV. Okay. This thing is down over 7% now and continuing to fall. That's a big
Yeah,
freaking move. In
it
fact,
is.
it's a move that's so substantial, it's already cracked the lower edge of the expected move. It was already falling though.
Mm-hmm.
Uh, I mean, overnight this morning, so it's just a gap print lower. The volume in here is huge. Nevertheless, okay, if you're looking for circuit breakers in a marketplace, you're not going to get them. That's the big takeaway over here is that people look for markets to kind of save them in the times of uncertainty. Go to gold. Well, in times of uncertainty, you're on your own there, big guy,
Yeah.
because you ain't got no circuit breakers to save you. 10% move inside of a rolling 60-minute period is downright wild, just downright wild. There
But I
is
think this kind of representative of like, we think about margin debt is at record highs in the S&P, right? Just for stocks generally. And we think about, okay, gold and silver. If this was purely about the utilizing gold as a money, right? You wouldn't see these kinds of moves like this, right? And so the idea is that there's leverage involved. And when the leverage unwinds, this is the paper market for gold and silver. When that leverage unwinds, we see big declines, right? So if we think about the same scenario happening in equities with margin debt at or near record highs, that unwinding process of leverage exacerbates the downside moves and volatility. And so again, this is kind of what we're seeing here with regards to gold and silver spilling over to equities. Do we start to see that unwind happen of the leverage in stocks? And that's the big downside, right?
Yeah, again, when it comes to gold and silver, though, literally, look, I definitely agree that there's some de-dollarization going on, and I agree with you regarding the administration, but I wouldn't think too deeply beyond this. That maybe is what sparked the trade, and then trade itself just gripped hold.
Right.
This isn't about, I know somebody was just mentioned about rare earths. It's not, okay? Because if it was, it wouldn't, like the options marketplace. Okay, look, this is SLV. You guys know that I trade SLV considerably. I trade SLV because a ton of our trades this year have been in SLV. A few of them have actually been in GLD, but in SLV, I trade this one far more often. And to see 373,000 contracts, just so you guys know, the last time that we did a trade in SLV, which is not that long ago, okay, in an average day, there's only 35,000 contracts trading in there on an average day. The volume was light enough that our trade in SLV, meaning us at TheoTrade, we moved the market in SLV. Like our spread literally had enough delta to move the market in there. There's 375,000. So I mean, and it's not even an hour into the trading day. It doesn't matter what you think, okay? There's one thing you have to understand is that, okay, people are going to come up with stories and it's this and it's that and it's the beginning of the end, okay? How about it's option order flow and stop thinking, okay? It's options order flow that's moving this marketplace. And you can literally, okay, point out in here and put your finger directly on some of the problem. Buying puts, okay, into the open, and they're trading at the ask or above and smashing the marketplace. Look at the put sizzle in here too. It's elevated, right? So that's an SLV. SLV, okay, there is negative order flow, a flying, okay, in SLV. Let's go look at GLD. Just break down the order flow for a second. Inside of GLD, it's the same freaking thing. People are bailing out of calls, which is negative, right? It's actually causing sell side activity to GLD shares, okay? And they're buying puts like they're going out of style. Now, of course, most markets are led by futures contracts. And I would agree, the futures contract was already selling off overnight, okay? And it was already selling off overnight, okay? Even in the futures contracts, and these are big futures, there's heavy negative order flow. So yeah, the contract was already selling off overnight. And what's going on though, as the marketplace has opened, okay, is it's exacerbating the move because people are trading, okay, you know, buying puts, which is actually forcing the product even lower. But normally the futures contract would lead the market. In this instance though, it is very evident that it's GLD, okay, is really the cart kind of leading the horse. And then the tertiary product. So GC is the primary, GLD, okay, is like a secondary. And then the options on GLD are like tertiary. That's really what's moving this marketplace, okay? It's the tail on the back of a cart. It's just weird, but that's what's actually knocking this marketplace apart.
Yeah.
And it's not like really like up for debate when you look at these numbers in here.
Right.
Like, look at GLD, it's staggering. So
well, that you make a very good point in that. Look, I mean, we can try to take the fundamental case for gold, but that can't explain what's going on in the gold market right now, right? So the idea is that, again, it's like yes, should gold prices be trending higher? Yes, but to the extent that we're seeing it, it's driven by what? It's driven by leverage, right? It's driven by those speculating in gold and far outpacing what was really happening. Yes, there's devaluation. We can talk all this stuff, but it doesn't account for the speed with which gold is going up because demand has not shifted that much to move it this quickly. This is about applying leverage in the futures market, the options market, driving this. You mentioned gamma. You buy calls, right? Again, this is going to drive prices higher just by virtue of buying calls. It's the whole premise of ghost prints, right? You know, trending, looking at bullish prints. But again, we're gonna realize that again, what is gold going to be valued at? Once this gets ripped out, we're going to see, okay, what is that base case for gold? We don't know what it is. It's being masked over by all the speculative activity. But when we get this pullback and we see that leverage start to come in, now we're going to get a sense for where gold should be.
By the way, I want to also make a quick comment on here because somebody was mentioning China. They're selling, you know, U.S. treasuries and buying gold.
Absolutely.
Well, yeah, but the thing is, they only own $760 billion of U.S. Treasury. You realize that $760 billion of U.S. Treasury, I had a buddy years ago, and he worked at a bond firm, arbitrage firm in high frequency trading, okay? There was 11 people that worked at his firm, and they traded over $100 billion a day. It's just 11 of them. So to see $760 billion, it's an afterthought. If they sold all of that in like 2 days, it might move the market 1 point. Like we're talking like a negligible amount. No one owns U.S. Treasury like we own U.S. Treasury. It's not even a consideration at this point. And the gold trade, you know, China's buying gold, maybe a little bit, but this is an options trade. That's so again, what we're trying to do is apply this ridiculous story, okay, to a marketplace that, look, it's just like any other tech stock, Okay.
Mhm.
Oh, Elon Musk was going along and then he got in a fight with Trump. And then, okay, it's a story. Okay.
Yeah.
Price action is price action. Implied volatility, okay, speaks volumes. Stop listening to the noise. Start looking at the order flow.
I mean
That's
that was the theme, right? Initially tariffs with gold, gold's gonna be tariff 30%. Then we realized it wasn't. Gold started to sell off, and then we started to smack China with tariffs. So this has been a theme. China selling treasuries, buying gold, right? Some of it spilling over the gold market. That is a theme. But again, the trade has been good if you've been long gold. But we also have to recognize when the trade is over. And this is one of the bigger signs the biggest sign we've had today, that the trade in gold might be over for a while. And we're going to see a deleveraging that's going to cause gold prices to go down. How much? We don't know. But you'll find where your kind of intrinsic value for gold is if we sell off hard, because we're gonna see, okay, this is where gold should be, right? Once you
so
kind of take the speculators out.
I want to switch gears entirely because somebody was mentioning like, okay, let's sell gold and buy crypto. All right. There is a significant issue, in my opinion, in the crypto markets that is often overlooked. And that is it's predominantly a one-sided marketplace. Yes, you can short crypto, okay, but not easily and with significant fees associated with it. Um, the issue, okay, at hand over here is even today, Bitcoin is still down. Okay, it's been flirting with this $110,000 level, which I keep talking about as an absolute critical and a marquee level. You break through 110,000, okay, and things get crazy. Then you're going to be talking about, the mid 95,000, dollar price in here. And you came down momentary kind of lapse. There's a lot of asset classes outside of the S&Ps that felt the volatility more than the S&Ps. Specifically, crypto was one of them. And crypto, I mean, shook out a ton of people the other day. But here's what's at issue, and I just want to bring this up for anybody that's ever traded this market. And that's not how many people here have actually dabbled inside of any crypto products. You guys tell me. How many people here have honestly dabbled? Just a Y for yes and N for no. How many people here have dabbled in some type of a crypto? See if it's even worth mentioning on here. Anybody? Anybody? Okay. All one of you. Okay. So, okay, enough people. It's almost, yeah, all yeses in here, couple no's. Okay. So with the crypto marketplace, I mean, yes, there's Bitcoin futures and Bitcoin futures. Okay, you can both buy them and sell them, and it's pretty fair liquid marketplace. But when you're going on like Coinbase, like it's extraordinarily difficult to just short a lot of the crypto products. So one of the things that people miss is shorts often support your marketplace. And support marketplaces by what? Okay. So if you have a market that is seeing some wicked sell side activity, eventually the shorts, those are the ones hoping the market goes down, they cover. And when they cover, what do they do by covering? They buy. And it actually supports the market by popping it back up. One of the things that you do not get, okay, in the raw, okay, Bitcoin marketplace or the raw like crypto marketplace is most of the crypto products don't even have the ability to be short because, no, there's just not enough liquidity out there. So when the market's tanking, okay, and people are trying to sell, there's no one to actually come in there and substantiate the price, okay, by buying back, all right, their shorts. It is a huge mechanism, okay, that is missing from this marketplace. So when the bottom drops out inside of crypto, it completely drops out, and people are going to be left like literally homeless from these crypto cracks. And so when you're looking for a rotation, okay, from gold or something, or market starts to sell off, you're looking from crypto, okay, those that have some experience in markets, they might own crypto. Like I know some very, very smart people that will own some crypto, but we all know, okay, that if it comes apart at the seams, that's it, that it's going to be worthless. You need to look, okay, at Bitcoin a little differently than any other asset class. Look at it, okay, with a percentage of your portfolio and say, if this went to zero, okay, would I still be okay? And people are like, oh, that can't go to zero, okay? It can, and a lot of them will. a lot of the, alternative, coins in there, the altcoins are going to
Mhm.
go to zero. They just are. Bitcoin, I don't necessarily put in that category. Okay. But you don't have the short in the marketplace to support it. Market making can actually be both long and short Bitcoin. But again, it's still very, very minimal in there. The other aspect that really should kind of resonate with you, okay, is that Coinbase, and everybody kind of wants to use Coinbase. Coinbase is your broker, Coinbase is your exchange, and Coinbase is your market maker. To have all three of those combined into one, okay, firm, you're so exposed. I mean,
It's centralized finance at its
yeah,
worst. I'm
it's
like, it's antithetical, right?
everything that crypto was supposed to be, okay, is completely distorted into one large. I mean, that's how FTX happened, is because people relied on one firm to do everything. You
Mhm.
relied on them, and they backdoored in and took money from people,
Yeah.
and it's shockingly bad business, okay, in that marketplace. Until they
So-
start really cleaning it up,
yeah. Well,
it's sideshow Bob.
but the problem is you get people. It's just like, for example, like you listen to AM radio in the past. Like you have the gold commercials, right? Buy in times of inflation, but like they feel like gold is both a commodity and a currency. And that's the problem with Bitcoin, right? They think that there's a real return in Bitcoin long term, and there isn't. If Bitcoin is money, it will yield nothing, right? All you can do is hope that it will maintain its purchasing power over time. But the problem is, it's not a very good, does not do very well at that because of the leverage that's in the market. And so when people delever, it causes significant drop in prices, and it can go up for prices. So it looks like an investment, but all it is the ebb and flow of these levered bets on Bitcoin. But at the end of the day, if you believe in Bitcoin, you're holding it because you think it will maintain its purchasing power over time, and it will give you a zero real return. And that's at the end of
That's
it. So, but then you got Ripple out there that Ripple has no business. It's an open source platform. They don't generate any revenue, and yet it's over $100 billion, right? So this is the crazy market we're in. I mean, you want to look at SMR and Oklo, similar scenarios with those stocks, right? I'm like,
well, that's
how
actually in the
long?
news today too. SMR and
How long
Oklo are
are we
both
going to
in the news.
support these companies that do nothing
But they're going to
and
build a
literally
small
nothing?
nuclear reactor, man.
But Don, think about it this way, right? Oklo generates zero revenue. They've raised over $400 million, SMR over $400 million through stock offerings, and they're only investing like 1 to 5 million in PP&E. That's property, plant, and equipment. If they had product, right? If they had a business and a product that they were about to produce, wouldn't they be ramping up production right now instead of just investing? Right? So they're investing in what? They're taking that $400 million
Themselves
they just raised, investing in who and what?
in
They're
themselves.
not investing in themselves and buying property and plant equipment. They're not manufacturing anything.
No, they're actually
There
taking the
is
money
no
themselves.
business.
It's
Right.
literally investing in
They're
themselves.
just ingratiating themselves, right? I mean,
Of
that's the
course.
problem. We're reading about, we saw that cracking in regional banks. Why? They're investing in crap private equity companies, right?
So
Now
here
what?
will be the undoing of, like, when you get Sam Altman out there and he comes out, which, by the way, I've decided that Sam Altman, he's not even real, right? He's he's an AI and figment of imagination. Anyway, so when you get Sam Altman coming out there, he's like 100 gigawatts. I'd be like, all of it is based, okay, on Oklo and SMR. I don't think a lot of people realize that. There's no one else that could possibly, like, build that kind of power. Where's the power coming from? It's coming
But
from
Oklo
Oklo or
doesn't have a
SMR.
product.
Yeah,
This
I am aware.
zero revenue, zero for years. They're just siphoning out
They're
money from
gonna
from
build
investors.
something. We're gonna
They're
build
just
something.
right. We
Yeah.
will someday, maybe.
Hmm.
Maybe, and this is, I mean, this just epitomizes the tech bubble, right? Where people in their companies in their prospectus says, we will never make money. It's just like the guy that was selling his crypto in 2017 and 18. It says, you buy my cryptocurrency, you're funding me to basically buy stupid, just electronic equipment, gaming, right? This is all you're doing. It's just on a much, much bigger scale. These companies do not have a product. They may never have a product, more likely, and they're not even investing in the ability to produce a product.
By the way, I'll give you one that it actually really, it's always bothered me about Bitcoin. When I first learned about Bitcoin, it was way back early Bitcoin because TD Ameritrade had an entire unit, okay, that was designed to look at up and coming products. Like
Uh-huh.
there was an entire division of the company and it was like a black ops company. And they eventually moved it out of Chicago. So it ran itself. It was out of Michigan. It was, oh my gosh, what's the name of the little Ann Arbor? It was in Ann Arbor, Michigan. And I got to go there a couple times. Anyway, they ran like a black ops out of there, and Bitcoin was one of the things they looked at substantially. And all of us always sat around. They were like, "So you spend a bunch of money on power to mine this thing, and then we get a return, but then the next person has to continue to mine." And like, we're like, "So is this good for the environment?" And everybody's like, "Absolutely not." Do you know the amount of power used in this? I mean,
Mm.
now, like in mining, is so wild because at these price points, the bigger the price, okay, the bigger the mining. It is wild. So I want to wrap up a couple of things over here. The only thing I did this morning was put on an SPX butterfly that was out of the money. Still have a Google trade on my SMH trade. It's fine. We're all fine. And XLU has actually come back around a little bit here. So XLU, okay, is down some 90 cents. Things getting smoked a little bit. This is actually on the path to the dark side. So the path of the dark side is a lovely one. We're very close to lower edge of expected move. But the XLU trade is we are baby, you're hitting the lower edge of the expected move this week, and you may be on the dance floor to make a couple of bucks in that trade. It was put on October 10th. It's been on for like 11 days. It is what it is, but you come down here and you're going to have a trade starting to make some decent amounts of profitability. I don't have a ton of in-out spreads on. I really only have SMH and XLU. I'm shopping in-out spreads right now, but quite frankly, there's a lot of earnings, and I'm not exactly sure. I look at stuff like Walmart. This thing's got a big bid that could actually pull back a little bit. I needed some good two-sided trade, and it does look like we're starting to open back into some two-sided trade. So, hey, wait, now we got three of us on here. We got myself, we got Brandon, and ladies and gentlemen, the professor himself, Jeff Bierman. Dead silence. No
I
intro
need
music.
I need multiple camera angles. I can just like go take a different perspective.
I'm
Multiple.
scared to play music that Don doesn't like. That's my fear.
There's this
What's
guy
the worst
on
that I could do? Kick you off, which I would totally do.
there's this guy on YouTube that he plays the bass, and he'll do Fiverr stuff and have people do like a bass line.
Uh-huh.
And like there's this guy, the multiple camera, like the guy who would do bass, they have like 5 different camera angles.
Oh, geez.
Yeah.
It's like I need at least 3.
By the way, somebody, SRC was saying, has double the supply of power to keep up now. So we're spending a ton of money to decrypt a pointless calculation for a store of nothing, okay, for something that may or may not be worth something in the future. Is that what you're getting? Yes. Okay. I just wanted to be clear about that. Like it really,
Stop the
that's,
bass.
well, that one actually bothers me, crypto. Like just the amount of power being used on that for a store of absolutely nothing. Okay, I want money.
Yeah, but JP
Um,
Morgan has how many employees? 200,000,
of which
right?
like there's 50
So
that are like really involved though in trading, and the
yeah,
other 249,000, 500 whatever, are involved in selling you crap to get your money under
right.
management.
So
Yeah.
if we basically said we don't need any of these banks because we can use crypto, right? Because we don't need third-party verification. We don't realize like we could get rid of tons of redundancy that would cripple the commercial real estate market. But
So I want to answer one question, then we're going to turn it over to Jeff. But thoughts on playing a vol crush on gold or silver? And the answer is absolutely not. So
yeah,
the reason I wouldn't go after the vol crush, and I'm going to tell you exactly why, is if you take a look at the auto expected moves, the market's been outstripping the moves anyway, which means that volatility, even though it's high, isn't high enough, okay,
mhm.
to warrant the movement that you're actually getting in the product. So the answer is all you have to do is glance at the expected moves on a weekly basis and tell yourself, that is not what I want to do.
Yeah.
They're also in a wild wild backwardation. So that's not a comfortable place to be right now. And don't think that this can't continue to sell off. I think this is one that we're look, I looked up the rules today to find out that a 10% move, okay, in a 60-minute rolling period is what it takes to actually trigger. That means easily it can have it. So I haven't seen it. Not in like recent history. I haven't seen anything like that. Okay. But do not discount the ability for a far more dramatic move to play out inside of GLD today. And the reason I'm saying that specifically GLD and gold is because the contract size in here, look at the number of puts being bought. It's double. They're hammering into the product like constantly. This is about options order flow. It's not the end of the world. Okay. It's not some people lined up at the, the London, gold exchange out there, which they love. The media loves to show that graph. It's about options order flow. Okay. And that's what it'll continue to be about. Ladies and gentlemen, we're going to turn it over to Jeff Bierman. Brandon, thanks for joining me here in the first hour.
See you guys.
It's been quite nice. Jeff, what are you covering today?
We're going to talk about the new normal of trading patterns, which is just the line. It's a line. Everything's a line now. There's no more vol. It's just a straight line.
It's a line. Well, there's a huge amount of volatility today.
Yeah.
I just pretty shocked actually how much the volatility has been moving around today. It's backed up. Let's turn it over to you, Jeff. The next hour belongs to you.
Okay. Let's get it going seamlessly. All right. Let me say this, kick this off by saying good morning and welcome to the